Hi guys, and welcome back to Cashbright. In this episode, we are going to expose one of the most silent and undetected costs in the economy today, and that is the standard checking account. Now you're probably thinking, hey, wait a minute here. Everyone has a checking account. It's totally necessary for salary payments, cash withdrawals, paying bills, etc. It just stores your money. How can it actually be costing me anything? Well, here's the thing. On the surface, it's not costing you anything. You keep your money in the account, it's convenient, and the account does what it's supposed to do. But people fail to realize that money and its real value is relative and entirely dependent on economic and market forces. People also fail to notice the costs associated with just following the crowd, doing what everyone else does, and not making your money work for you. These failures are actually costs. But there is a way to minimize these costs, and to even boost your earnings in the process. So let's dive in straight away, shall we? With number 1. Inflation eats away at the cash in your checking account. We always hear on the news or through our friends, family, colleagues, etc. of how the economy is doing badly or it's being mismanaged. But I think it's fair to say that most of us don't really understand how the economy affects us on a personal level. It's something abstract. Just a thing people like to talk about. Well, one of the ways economic performance actually affects you is by making the dollars you put in your checking account every month worth less and less over time. How can that be? One word: inflation. Inflation simply refers to the general increase in the price level of the economy. Prices on average go up over time, and inflation is why products bought today cost much more than if they were bought 20 to 30 years ago. Now, inflation is an inescapable byproduct of a growing economy, and it's kind of like a red wine. Some red wine is good for you, but have too much of it and you can start to feel unwell and things start to get a bit crazy. So, what do you think happens to the money in your checking account if inflation is 3% per year? Well, each year your money is able to buy 3% less of what it can buy today. In other words, the real value of your money and its purchasing power has gone down. By letting your money just sit there in the account, you are effectively losing money. And the bad news is, it doesn't end there either. Unfortunately, you are also losing money in another way. And that is our number 2. There is an opportunity cost of not putting your money to better use. The opportunity cost of something is a well understood concept in economics. Opportunity cost simply refers to the cost of not enjoying the benefit of choosing an alternative opportunity. It basically refers to lost potential. And when this concept is applied to your checking account, it refers to the cost of not putting your money in a savings account or investing it in stocks and bonds. For example, a savings account will differ from your regular checking account in terms of the level of interest it will generate. Now, the interest in a savings account is low and not likely to offset inflation overall, but if you are the kind of person that would rather not invest your money in a risky stock market, for example, it at least lessens the cost of inflation on your cash. If instead you are the kind of person who's prepared to up the risk versus reward ratio, why not consider investing some of your money in stocks and bonds? Now, bonds are generally the least risky type of investment to have, but they do offer a much lower rate of return on your investment when compared to other types of investments. In contrast, stocks are definitely riskier than bonds overall, but can offer a much higher rate of return. For more information and tips about investing in stocks and bonds, feel free to check out our other videos. So, the concept of opportunity cost is one that I hope will stay with you because it can be applied to almost any situation in your life. It can also act as a very effective motivational tool if ever you think of challenging yourself to change your life. It's all about finding the right opportunity and taking it. With this approach, we can reduce the opportunity cost in all of our lives. Number 3, don't ever let your money stagnate. We all know that money is what makes the world go round. Contrary to any colourful sayings, poems, or song lyrics we might hear. It's also good to see money for what it actually is. A fluid medium which we all use for buying and selling goods and services. The value of money, therefore, depends on how you use it. Whether this is through intelligently acquiring valued products or investing in carefully selected assets which will allow your money to grow over time. Nobody wants to incur the costs associated with letting your money sit and stagnate in a checking account. But the thing is, this is exactly what happens, and most people are completely oblivious to the gradual erosion of their purchasing power and the lost opportunities to use that money more effectively. Why in the hell is that? Well, I think it all comes down to a lack of information, combined with perhaps an overly negative perception of the available financial alternatives. Every one of us has a busy life, and there are 1,000,001 other things we need to deal with well before we can give ourselves 5 minutes to even contemplate our individual financial health. But you know, if, when we do have those precious moments, we watch YouTube videos on finance, read up on ways to make better use of our money, and take the time to really assess and reflect on our own financial situations, I think we can find a way to make better use of all our money. So, stop sitting still. Stop right now the drip, drip, drip that's coming from your checking account, and do something about it today. I promise you, you will not regret it. Thanks for watching. If you found this video to be helpful and would like to learn more, go ahead and hit that subscribe button. And remember, stay sharp, stay hungry, and stay cash bright.